Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera saudara-saudari sekalian. Selamat datang ke sidang akhbar prestasi ekonomi pada suku tahun kedua 2016. Pada sidang akhbar ini, Bank Negara Malaysia dan Jabatan Perangkaan Malaysia akan menyampaikan taklimat mengenai prestasi pertumbuhan ekonomi negara pada suku kedua tahun 2016. Taklimat ini juga merangkumi perkembangan monetari dan keuangan. Ekonomi negara mencatat pertumbuhan sebanyak 4% pada suku kedua pada tahun ini. Seperti negara-negara lain di Asia, pertumbuhan ekonomi Malaysia pada suku kedua disokong terutamanya oleh permintaan dalam negeri. Walaupun pertumbuhan ekspor meningkat, ia masih berada di paras yang perlahan memandangkan ekonomi global berkembang pada kadar yang lebih sederhana pada suku tersebut. Sektor swasta kekal sebagai pemacu utama pertumbuhan ekonomi Malaysia. Sektor swasta berkembang pada kadar yang lebih kukuh pada suku kedua berbanding pertumbuhan pada suku pertama tahun 2016. The global economy expanded moderately in the second quarter of the year. Global trade activity continued to be subdued. Financial market conditions were volatile, due in part to heightened uncertainty surrounding the UK-EU referendum. In the advanced economies, growth remained modest and continued cyclical and structural weaknesses. In Asia, several economies registered moderate expansion, supported by domestic demand despite the persistent weakness in the external sector. Amid heightened risks, monetary policy remained accommodative, with several major and regional central banks conducting further easing. The Malaysian economy, as I mentioned, expanded by 4% in the second quarter of this year. But there are a few things that I thought I must highlight. First, both private consumption and private investment recorded stronger growth. The two demand components are our key growth drivers, and this performance underscores the health and resilience of the economy. Second, export growth had actually recorded a positive growth. This is highly commendable given the challenging state of the global economy. The continued weakness in net exports was predominantly attributed to higher imports of capital goods for ongoing capital investment. Third, growth was also set back by a significant drawdown in inventories. To some extent, this was due to several factors. There was a drawdown in stocks following a build-up of inventory in the preceding quarters. The lower production in agriculture commodities amid sustained demand also saw a material drop in stocks, particularly for CPO. Some of these factors may well be temporary and may have obscured the underlying growth momentum of the economy during the quarter. On the supply side, all economic sectors, with the exception of the agriculture sector, continued to expand. The services sector grew at a faster pace, driven mainly by consumption-related services such as retail, information and telecommunication, food and beverages, and accommodation, in line with the improvement in private consumption. In the manufacturing sector, the stronger growth in the export-oriented industries benefited mainly from the higher production of semiconductor and petrochemical-related products. The domestic-oriented industries were supported by sustained production of food and beverages, as well as construction-related materials, despite weaker motor vehicle output. Growth in the construction sector was stronger, underpinned by civil engineering activities in petrochemical transport and utility-related projects. The mining sector performance improved on account of higher crude oil and natural gas production, particularly in Sabah. Growth to the agriculture sector contracted at a sharper pace due mainly to double-digit decline in production of palm oil amid the lagged impact of El Nino on yields. Let's move to the private sector. On the demand side, private sector activity remained the sector of growth. In the second quarter of 2016, with its share accounting for 73% of overall GDP, public consumption and investment were also stronger during the quarter on account of higher spending on supplies and services as well as on fixed assets. Net exports continued to register a decline, albeit at a slower pace. Real export registered a better performance due to higher demand for manufactured exports. Real imports increased at a faster rate due to improvement in growth of capital and intermediate goods. Going by the component of domestic demand, private consumption registered a strong growth of 6.3%. For the first quarter, the number was 6.5. For the Q1, the number was 5.3%. After the trough in the third quarter of 2015, due to the implementation of the GST, household spending has recovered and continued to rise. Household spending was supported by continued growth in the wage and employment, as well as additional disposable income from government measures. Manufacturing sector wages grew by 5%, supported by export-oriented industries, while wages in the distributive freight subsector grew by 5.3%. Government measures in the second quarter of 2016 were mainly in the form of Al-Fitri special assistance, reduction in employees' EPF contribution rate, and BRIM disbursement. After the underperformance in the first quarter of the year, private investment grew at a faster pace of 5.6% in the second quarter. Business confidence was affected in 2015 following a series of shocks to the economy. The fall in commodity prices, ringgit depreciation, and volatility in capital flows. However, there has been a clear sign of improvement in the business confidence since the third quarter of 2015, which augurs well for the prospect of more private capital spending. Despite the greater headwinds in the global economy, Malaysia remained a competitive destination for multinational corporations to do business. In the second quarter of 2016, Malaysia continued to receive a steady inflow of FDI amounting to 8.8 billion ringgit or 3% of GNI. This remained above the quarterly average of FDI inflows during the post-global financial crisis of 7.8 billion ringgit. FDI during the quarter was channeled mainly into the manufacturing sector, particularly for expansion in the E&E and petrochemical industry. This is followed by investment in the services sector, mainly in the real estate and information and telecommunication subsectors. Let's turn on the current account numbers. In the second quarter of 2016, the current account recorded a smaller surplus of 1.9 billion ringgit or 0.6% of GNI. Seasonal trade patterns, volatile commodity prices, imports of capital-intensive items, and large and volatile payment for services and income accounts are the reason leading to the narrower current account surplus. During the quarter, the higher FDI income received by foreign investors in Malaysia was due mainly to higher profit declaration by a few major FDI companies. Of importance, A portion of the foreign income was retained in Malaysia for reinvestment. Malaysia investment abroad also recorded higher profit for the second quarter of 2016. The current account will continue to face headwinds given that our trade balance will be affected by subdued global demand and rising imports in the domestic economy. However, imports are necessary to further enhance our productive capacity and improve our export competitiveness. With quality investment, Malaysia will be in a better position to tap new opportunities when global conditions improve. Let's look at the ringgit. In the second quarter, the ringgit depreciated against most of the major and regional currencies and retraced some of the appreciation in the first quarter of 2016. Overall, the ringgit nominal effective exchange rate and the real effective exchange rate also depreciated by 3.2% and 2.4% respectively. The ringgit, like most regional currencies, depreciated against the US dollar during the quarter. Currencies reacted to the uncertainty surrounding the pace of interest rate normalization in the US. The ringgit, however, faced larger adjustment due to the continued volatility in global crude prices. Moving forward, the ringgit will continue to face volatility due mainly to uncertainties in the external environment. Let me cite three of them. First, despite current expectation of a slower pace of interest rate increase by the Fed, this expectation can shift very swiftly. Second, crude oil prices will remain volatile due to uncertain supply and demand conditions. Third, uncertainty surrounding the impact of EU referendum in the UK on global economy and financial markets. Despite the volatile global environment, Malaysia's economy and financial market have been resilient given the country's strong external position, sustained economic growth, low inflation, and sound financial system. These are the key fundamentals supporting the ringgit over the medium term. Let's look at the bond market. Non-resident holdings of Malaysian government bond have increased over the past month to around 34.1% of the outstanding value of government bonds, or 209.7 billion ringgit as at end of July 2016, compared to 29.8% in December 2015. The majority of investors in the Malaysian government bond market are long-term investors, mainly asset managers, central banks, and pension fund. And this is quite important because these long-term investors will ensure stability of the market. On the international reserve, as at 29 of July 2016, the international reserve was $97.3 billion. This represents a 4 billion ringgit increase from the low of 93.3 billion ringgit as at the end of September 2015. External debt amounted to 848.2 billion ringgit, or 69% of GDP during the quarter. About 60% of the external debt is of the medium and long-term tenure, suggesting no immediate repayment requirements. Close to 40% of external debt is denominated in ringgit and is not subjected to valuation effects. On the other hand, the foreign currency denominated external debt is largely hedged and backed by external assets. Let's look at the inflation for second quarter of 2016. Headline inflation declined to 1.9% in the second quarter of 2016. The decline in inflation was broad-based across all 12 CPI categories, due mainly to the lapse in the capital of goods and services tax, which was implemented in April 2015. The transport category and also recorded the largest decline in inflation to minus 6.6%, in the second quarter of 2016, attributable mainly to the base effect from higher domestic fuel prices in the corresponding quarter of the year. The OPR was lowered by 25 basis points, as you are aware, to 3% at the last MPC meeting in July. The adjustment is intended for the degree of monetary accommodativeness. With the adjustment, the OPR remained consistent with the policy stance to ensure that the domestic economy continues to expand on a steady growth path and stable inflation. Financial intimidation continues to function very smoothly. Following the OPR reduction, the 3-month CLIBOR declined by 25 basis points from 3.65 to 3.4%. As at end of July, the weighted average base rate of commercial banks declined by 21 basis points from 3.83% to 3.62%, with downward revision of base rate by most banks ranging from 20 to 25 basis points. Correspondingly, the fixed deposit rates declined by an average of 18 basis points for tenures 1 year and below. Let us look at the financing for the economy. Net financing from the banking system, development financial institution, and the corporate bond market expanded by 6.9% as at end of June 2016, while outstanding banking system and DFI loans grew at a lower pace of 5.5%. As at the end of June, gross financing to the private sector, to the banking system, DFI and capital market was sustained at 292 billion ringgit during the quarter. On an annual basis, outstanding business loan grew at a slower pace of 3.8% as at the end of June, due to stronger growth in the loan repayment relative to disbursement. Financing activities remain supportive of the SME business operation. Financing to the sector, including to micro enterprises, grew at an annual rate of 9.2% to 285.5 billion ringgit during the quarter. SME financing comprised almost 50% of total business financing. Utilization of scheme pembiayaan makro also grew by 7.1% to 940.8 million ringgit, benefiting more than 67,000 micro enterprises. Eligible borrowers continued to have access to housing financing. House financing remained the fastest growing segment of household borrowing, with annual growth sustained at above 10%. There were 2.4 million borrowers of housing loan. Out of this, 84% or 2.1 million were purchasers of affordable homes, basically property below 500,000 ringgit. 1.5 million or 75% of the affordable homes borrowers are first-time homeowners. The domestic financial system remained resilient, and global uncertainties associated with development in China and the EU referendum, Brexit, have some implication but not significant. This is because direct exposure of Malaysian banks to counterparties in the UK are very limited, at about 1% of total assets and liabilities, respectively. Higher market volatility post-Brexit was short-lived. Domestic financial market volatility has since eased to level below that recorded in the first quarter. The banking system remained well positioned to respond to challenges arising from tougher business conditions and higher costs. For your information, the excess capital of the banking system stood at 120 billion ringgit and remained of high quality. On the liquidity of the system remained ample, and it provides firm support to the financing activities of the banking system. Aggregate surplus liquidity of banking institution placed with the central bank total 178.5 billion ringgit. Banks also continue to maintain a high liquidity coverage ratio of 125%, that is comfortably above regulatory requirement of 70% to meet unexpected cash outflow, or adverse liquidity shocks. Funding conditions continue to remain following the reduction in the SRR in February. This has eased competition for corporate deposits and led CLIBOR lower from earlier elevated levels. The average funding cost for banks remains stable at around 2.55% in the second quarter of 2016. In recent years, banks have been diversifying their funding structure to better manage maturity mismatches. The amount of outstanding debt instrument issued by banks expanded by 5% annually to 100 billion ringgit. Taking into account the broader funding base, the loan to fund ratio remains stable at 82.6%. The banking system credit risk exposure to business remain manageable. Aggregate leverage levels and indicators of debt servicing capacity continue to be above prudent levels. This has continued to support business loan delinquencies and impairments at low and stable levels. The direct impact from Brexit on Malaysia Corporation, with significant operation in the UK, mainly in the property development, is expected to be limited. This is given that the projects have already been locked in with strong take-up rates. Credit conditions remain conducive for businesses, including SMEs. There is limited evidence of broad-based tightening in the supply of credit. Growth in the outstanding bank financing was driven mostly by SMEs. Let's look at the household data. Household debt sustained its slower growth momentum, increasing by 6.2% at the end of second quarter. On aggregate, households continue to maintain strong financial buffers. This continues to provide support for adjustment by household to rising costs. Improvement in affordability assessment have reduced risk from household indebtedness. The quality of household loans remain sound. The ratio of impaired and delinquent household loans remain low at 1.6% and 1.4% of total household borrowing, respectively. Since its establishment in 2006, AKPK has provided financial advice and credit counseling to over 450,000 borrowers and helped more than 155,000 borrowers from being declared bankrupt. This time round, we thought that we should update you with the numbers by AKPK so that you know that those who face financial difficulties have an avenue to seek help. The services by AKPK are provided free of charge, and there are 11 branches in all states except for Perlis, Selangor and Negeri Sembilan, and 27 counselling officers nationwide. At the end of June 2016, 10,705 people, debt management program customers have fully settled their loans, while 86,000 customers are actively repaying their debts under this program. They are given a maximum period of up to 10 years to fully settle the loans restructured under the debt management program. So they are given a breathing space in order to meet their debt obligation. Let me conclude this press conference by saying that the Malaysian economy is facing greater uncertainty and challenge. To date, our growth performance have remained resilient, as reflected by the steady growth performance of the economy, particularly in domestic demand. Our assessment is that the Malaysian economy is expected to remain on the current growth trajectory of 4 to 4.5% for 2016 amid the increasingly challenging environment. In the second half of 2016, growth will be supported by several factors, including higher wages for civil servants and upward revision to the minimum wage, continued implementation of infrastructure projects, improved commodity production from diminishing effect of El Nino. The biggest uncertainty and headwind faced by the Malaysian economy would likely be from the more challenging global environment. Nevertheless, we are quite confident that our sound fundamental, preemptive policies, and well-diversified economy have placed us in a good position to weather these shocks and challenges. Thank you very much.